When interest rates are low, institutions, banks, and corporations can borrow money significantly easier, and you don't need as big of a return to justify borrowing money. Because if you can borrow $100 million at 3% a year, you really only need to see a company grow by 5% a year for that to be a profitable investment. So it was a very low standard to get an investment, and so money was just flowing everywhere. But now the interest rates are going up, the environment is changing, because now investors and banks and institutions are looking at companies saying, well, if you don't have a sustainable profit, if you don't have an actual product that people are willing to pay for, if you don't have ability to become profitable, we don't want to keep investing our money in you. Even though we think, or you say you're worth $2 billion today, we don't want to invest at that valuation. And now if a corporation is trying to raise money at a certain valuation, but people don't want to keep pouring money in there, or they can't keep raising debt, now all of a sudden the value of the company drops. Now you might go from $2 billion down to $1 billion or $500 million, and now it becomes significantly more difficult for you to borrow money or get an investment, because all your previous investors are going to say, wait, I thought you were worth at least $1 billion. How can you raise money at a lower valuation now? And that makes it more difficult for you to keep raising money, to keep paying for employees, which is why you've seen a lot of layoffs across the tech sector, which is why you've seen a lot of hiring freezes across the tech sector, because over the last number of years, valuations have gone through the roof. And so companies were able to just get so much money to invest in so much growth. And now a lot of companies have realized that they grew a little bit too big, too fast, and now they're needing to scale down. And some companies might be realizing that maybe we have a product that people don't actually want to pay for, and we don't have a path to profitability. So chances are you will probably see some companies shut their doors. So that's the valuation side, and why things like the stock market can affect the economy, because if stock prices drop, then companies may be less likely to go out and hire more people because they just can't go out and raise more money. That's happening on one side of the equation. And on the second side of the equation is more of an inflation issue, because now you have companies like Walmart, Target, Amazon. These are your core retail companies. You have the brick and mortar retail and the digital retail, and all three of these companies have come out and said that inflation is significantly hurting their outlook for the future, because now people are spending more and more of their money on their basic necessities, things like food, and they have less money to spend on other things that would make these companies more profits, which is why these companies have been reporting smaller profits, because, well, people just don't have as much money to spend because inflation is so high. But inflation really cuts like a double-edged sword, because on one hand the prices of things go up and people also will need more money. That's why now on top of that, these big retailers are struggling, because not only are they not able to make the profits that they were before, but now their employees need and want more money. So they're not making enough money from selling stuff, but now their expenses are going up because people need and expect more money in order to survive this higher cost of living. So now if you're a corporation and you're not able to make enough money because you can't raise the price of your products enough, and your employees need more money because inflation is so high, that lowers your profits, that lowers your growth ability, and that could potentially lead to slowdowns in the economy and slowdowns in growth for your company, because you're going to say, there's no point for us to keep growing because we can't continue to operate the way we are, and maybe you need to cut costs. Maybe you close stores. Maybe you have to lay people off because it's harder and harder for you to survive with these higher costs. All of these factors coming together are really starting to change the job market kind of quickly, because not too long ago, the job market was completely in the hands of the employee, because every corporation was looking for employees, and employees had the upper hand. There was the Great Resignation that was going full force, and people could negotiate stronger incomes and they could do whatever they wanted. Now we're starting to see it's start to shift. We haven't really hit the full shift yet, but we're starting to see this change where corporations are starting to really look at their balance sheets and say, well, we can't keep hiring people at free will. We have to be more picky when we hire, and maybe we have to slow down our hiring. And so if that continues to happen, that could shift the employment market, because now the employers are going to say, well, we just don't want more employees, and that could leave now a bigger surplus of supply of employees, because people will be looking for jobs, and corporations will say, we just don't need more employees because we can't afford them. And then that could change things, because now the employees would say, well, now we need a job. I'm willing to accept a pay cut. I'm willing to do something I don't like. I'm willing to do whatever it takes to go and get a job, and that could completely change the market. So now, if you are looking for a job, especially if you're a millennial or really any generation, there's a few things that I want you to pay attention to. Nobody can predict the future, but it's almost guaranteed that we're going to see more uncertainty in our economy ahead. So if you're looking for a job, it would be beneficial for you to look for a company that is more robust, that has the ability to withstand a lot of uncertainty in the economy. Who knows if we're going to go into a depression or a recession, or if things are just going to get completely better and the economy will continue to boom. It's really hard to predict what's going to happen, especially because we don't know what the Fed is exactly going to do, and that can really impact how everything's going to play out in the economy. So at the very least, when you're looking for a job, make sure the company that you're applying to is robust and can withstand uncertainty in the economy. The second thing that's going to be especially important for you is you have to be educated about money, because anytime you go through these types of uncertainty, you want to make sure that you're taking care of your money, that you're not just cashing out of your 401k in panic, that you're not just blindly losing your money in all these assets because things are going down, because people are panicking. This is where you want to get smart. Look, at the end of the day, recessions, crashes make more millionaires than any other time. And the thing that these people understand is that recessions, downturns are a part of the economic cycle. You can't fight it. I mean, I guess you could try to, but that's not going to work out in your favor. So instead, learn about it, get educated about money, and look for the opportunity. And third, prepare for bad times when times are good. That means put some cash aside. Put some cash aside to protect you just in case something happens to your company, or if something happens for a job and you don't have an income for a little while. And put some extra cash aside to help you invest if you see a distressed asset come your way. Maybe if you see a stock market downturn, or if you see an opportunity in the stock market, the real estate market, the cryptocurrency market, well, then you can have some cash to go out and buy some assets at a discounted price. But this requires you to have some money, to have some capital in order to do that. And the best time to prepare is when times are okay. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. These are things that you can start doing even if you don't have a lot of money. So if you want to read this free guide on how to start generating passive income for free, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.